All right. Hello and welcome to the Accredited Investors Only podcast presented by Accredited Life. I am your host, Peter Neal. It is great to be here today. Thank you so much for listening. I have a very exciting interview lined up for us today. But before we get into that, I want to ask you, as I have in many other episodes, are you living your accredited life? So just to kind of recap, what is accredited life and, what do I mean by that? Essentially, it's are you living the life you want to be living? Are you living a life that is fulfilling, that you are excited to get up to in the morning and to get things going and to achieve the goals that you have set for yourself and just to live that life that you can be living. Maybe you are living, but maybe you're not. So I have seven things I've shared before on this kind of 7 stages to living your accredited life. Let me recap them real quick, and then we'll get right into the interview, which I know you're excited for. So starts with foundation. Who are you and where did you come from? Why are you that way? What has made you the person that you are today? So are you building and working on your foundation? This is something that you can do on a daily basis, kind of in reflection, but something too that you should look to spend some time with, and asking yourself why you are the person you are and what kind of experiences and lessons and things like that that you've learned, how they've led to the person that you are today. And from there, I want you to take time to kind of start to look at where do you want to be? Where are you going? Where do you want to be? And by the end of next year, the end of next month, the end of a few years from now, 5, 10, what's your plan moving forward? Where is the actions that you're bringing the actions that you're taking today? Where are they bringing you? Where do you want to go? So I strongly suggest you take time out of your day, maybe, at the end of the day, before you go to bed, something like that. This is kind of like a dreamer's. You're supposed to have fun with this, to imagine what your life can be. And then to kind of get back to what I was saying there, the next step is to start to plan it. So it's so important that you don't put any kind of restrictions when you're having fun with crafting your vision here and perfecting this perfect vision for where you want to be. A lot of times when we think about stuff like that, we'll have that voice in our head that tells us you can't do that and you don't have enough money for that. You don't know people for that. You've never done that before. When you're doing that, when you're going through that stage, let that come in and then let it go right out at the end of the day. I think that's very important, not to put any restrictions upon that. Now, once you have a good idea of where you're at and what you want to do and all those kinds of things, now you have to start to plan that. So think about, who do you need to know? What do you need to do? What books do you need to read? What conferences do you need to go to? All that kind of stuff, in order to make your dream a reality. And that's when you'll probably start to really hash out what's important to you, what's not, what you're going to do right away versus what you might do down the line, all that kind of stuff, which leads us into the next stage, which is really living your purpose and making sure that what you're doing, you're excited to get up about in the morning, you're excited to do, because if you're not doing something, then chances are it's not aligned with where you're at in your life or something like that. So it's nothing to get irritated over or anything like that. It's just a sign that maybe there's something else that you need to be working on, something else you need to be doing. So in really asking yourself why, you're aligning your foundation with your vision, with your plan, and then you kind of takes us into that next stage of living your life. That is, just going through the motions on a daily basis, putting the work in, and just making your reps at the end of the day. So it's very important, and not to get distressed. There's going to be good days, bad days, but you want to continue to move forward. And from there, it's about loving your life and making sure that you don't take things for granted. As an accredited investor, as somebody that has gotten a certain level of success and wealth in your life, it's important to not take that for granted. Important to find ways to share and to live as the example, and that's your legacy at the end of the day. Is every day the person that you are and the person you show up as is is the legacy you're building, whether you like it or not. So that kind of gets into the last stage is embracing the quiet, having time for reflection and things like that, which leads me into today's interview with Brian Burke. So Brian is somebody who is in that reflection stage right now. He's done a lot of amazing things. And he's going to talk about where he's at in his career today, how he's slowed down in certain ways, but has picked other things up. So I think he's a perfect example of somebody who is living their accredited life. So just to introduce Brian, Brian is the president and CEO of Praxis Capital. That is a vertically integrated real estate private equity investment firm that he founded in 2001. So Brian's been doing this for a long time. He operates on multiple investment platforms, currently managing active syndications for the acquisition of single family, multifamily, and opportunistic residential assets, really across the United States in different growth markets. Brian has acquired over $800 million worth of real estate over his 30-year career. That includes over 4,000 multifamily units and over 700 single-family homes, with the assistance of proprietary software that he himself has written. Brian has subdivided land, he's built homes, he's constructed self-storage, but his preference is repositioning existing multifamily properties. He is the author of this amazing real estate book that was published by Bigger Pockets, A Hands-Off Investor. It's an investor's guide to passive real estate syndications. I love this book. I've read this book. It's kind of one of those handbooks that you keep around for various reasons to go back to on different occasions. I strongly suggest you pick it up. So I'm very excited to welcome Brian to the show today. Let's get right into the interview.
You're listening to the Accredited Investors Only podcast, presented by Accredited Life.
All right, Brian, welcome to the show. How you feeling today?
I'm feeling great. Thanks for having me here.
Well, thanks for being here. It's such an honor to be talking to you. And we were joking before the show. I've seen you around for so long, and this is the first time we're meeting. So it's just I'm happy you're here, and we have so many things to discuss. So let's just kind of hop right into it. But before we do, could you introduce yourself in your own words? You got a lot going on. I'd love to hear how you introduce yourself to our audience.
Well, I think the best way is just to kind of describe how I got started in this business, which was 35 years ago. I started as a 20-year-old high school graduate, investing in single family homes to buy, fix, and flip. I did that for a lot of years. Started slow, like most people in this business, because when I got started, I didn't know anything, I didn't know anyone, and I didn't have any money. So I managed to take that nothing business and turn it into a pretty successful business, I would think, because in those 34 years, I've managed to buy over 750 houses, over 4,000 apartment units, raise over $400 million from investors, and buy almost $1 billion in real estate. So I would think that that's a pretty good way to cap off a long career that started by a very humble means.
Wow. Well, let's dissect all that. One thing I was showing you before we started was your book. I'm sure that's one of the things you talk a lot about, The Hands-Off Investor, an insider's guide to investing in passive real estate syndication. So how has this book changed your life and your investing and everything?
Well, the one thing that happens anytime you teach a subject, including writing a book on a subject, is you really get to know every little bit of that business as you do your research. Fortunately for me, I spent 30 something years doing the research for this book, because this comes from practical on the ground experience of raising money from high net worth individuals and being a passive investor myself on that side of the table, and talking about the things that I look for when I'm making a passive investment. So it hasn't, I wouldn't say it's necessarily changed my life, but hopefully it's changed the lives of others who are trying to invest passively. A friend of mine lost her entire life savings investing in a passive real estate syndication. And it was one of the motives for writing this book. Wow. Was to try to prevent that from happening to just one person. The whole effort would be worth it. So hopefully somebody out there has said no to an investment they might otherwise have said yes to and avoided losing their entire life savings.
That's a really good point. Yeah, sometimes it's the investments you don't make that are your best investments, right? It's sometimes the decision to not do something is just as important as the decision to do something. So, what do you think are the key things that an accredited investor should look for when they get into a real estate syndication? They make the decision to invest on the passive side.
Well, long before they ever make the decision to make an investment and long before they are even looking at a deal, what they should be doing is looking for really good, solid operating partners to partner with. Some people get into this debate over horse versus jockey. In other words, is the sponsor more important or is the deal more important? My position on this has always been, pretty heavily in favor of the argument that the sponsor really is what makes or breaks everything, because a really good sponsor can make the best out of a bad situation, and a bad sponsor can screw up a perfectly good real estate deal. So first things first, find the right partners to invest with, do tons and tons of homework, research, get to know you, spend time figuring out who they really are, how they really think, get to where you can really trust them with, 5 or 6 figures of your very hard-earned money that's very valuable to you. You can't just turn it over to anyone. If you find a really good, solid sponsor, then the deal is kind of secondary, because if they are truly really good, they should only be bringing you really good deals. And that'll make that part of the process that much easier when you get there.
Yeah, that's a really good point. Now, and you said you do some passive investing yourself. Or is there kind of a set of questions? Because I feel like a lot of it comes down to, are you good at asking questions or not? Do you know the right questions to ask? Or are there some questions that you think, non-negotiable, you should be asking these questions? And if so, what are they?
Yeah, there are, because there's this whole thing is about doing the homework on the sponsor and figuring out whether you should make this investment. If you don't ask any questions, you don't know what the risks are. And investing in a passive syndication is really about a risk-adjusted return. I mean, if it wasn't about that, then you might as well just go invest in bonds, the stock market, put the money in a CD. There's plenty of other places you can invest capital outside of a real estate syndication. So what you're looking for is, how can I get a healthy, non-correlated, meaning disconnected from conventional stock markets, bond markets, return for the risk that I'm taking, and how do I quantify what that risk is? So if you don't ask questions, you can't quantify the risk. So some of the things that I'm looking for is, what is the experience of the sponsor? What is the sponsor's track record? What happened to the sponsor in the last real estate downturn? If they've never been through one, that's kind of an automatic disqualifier for me. Did they have properties go into foreclosure? Have they ever lost investor principal? Those are kind of some of the big questions. Past that, when you start getting into like deal level questions, it's about financing. What's the loan to value ratio? When does the loan mature? You want to know how much runway this deal has. If the market turns against you, is the loan going to come due in like 1 or 2 or 3 years, and there's no time for a market recovery and you're going to get stuck? That's a lot higher risk, and that means that the risk-adjusted return calculation gets thrown way off, right? So you really have to understand a lot about the sponsor, and then you have to understand a lot about the deal structure.
Wow. And there's so many things to dissect there, and you get into it in the book, at a much deeper level than probably where we'll go today. But so you have the sponsor, you have the deal. Let's get back to your introduction. Give me an overview. It sounds, how you talked about how you got started in single family. Now you're in California. I'm assuming you were there back in those days too. How has your career evolved over time? Are you investing in your state? Were you investing out of state? And I'm sure you've been all over now. So just talk to me about the evolution of your career, of where you started and where you're at today.
Yeah, it started like a lot of real estate investors who are just getting their start, is investing in your own backyard. And I think when you're first getting into this business and trying to learn it, that's really the best way to go, because your neighborhood, the area. If you don't live in a place where investing makes any sense, maybe you need to move. It's really difficult to be a brand new investor and investing across the country, especially in smaller properties. To buy a $50,000 house, you got to spend $1,000 in airline tickets just to go see it. That gets to be really problematic and challenging for people. So I started right here in my own backyard in California, buying houses here, fixing them up and reselling them. It was probably about almost 15 years, I think, before I bought my first out-of-state property, and it was all the way on the other side of the country in New York.
Wow.
So that was that was really interesting to kind of get jumped in to out-of-state real estate investing. The first big thing for me was out-of-county real estate investing and going, buying properties one county or two counties away. That was my original expansion and growth trajectory, was just kind of, going into other counties. I think eventually I was in 13 different counties in California, doing houses, and then, started going out of state.
So where are you at today? What are you investing in today? What do you like? What are you seeing in today's market? Where do you see the opportunity? And, kind of take the crystal ball out. Where do you think things are going?
Haven't really invested in anything. I haven't bought a multifamily. Multifamily is my core business. I haven't bought one in 3 years. The market collapsed in 2022, and in 21 and 22, I sold 3/4 of my portfolio, which amounted to about 3,000 apartment units. Sold them right before the market collapsed. Right after I sold the last of the ones that I sold, values tanked about 20 to 40%, depending upon where and who you ask. So I managed to avoid the worst of the market downturn, and I'm not really all that interested in catching falling knives. So I've been kind of watching the game play out from the sideline. As values have fallen, I'm waiting for them to trough out. So I've been spending my time investing in stocks, real estate debt, limited partnerships outside of real estate, such as oil and gas, pharmaceuticals, new drug startups, agricultural companies, just a variety of different things outside of the real estate space while I waited for real estate to come back into favor. I think, we're probably a little closer to that bottom now. So, I'm still looking at opportunities on the real estate side. Haven't found anything compelling yet, but I have a feeling that we're getting closer. And, chaos breeds opportunity. This is going to be a really good time to buy. At some point in the next, 1 to 2 years, there's going to be a really good time to buy, and I'm just waiting for it to arrive.
Have any idea of what do you think the event is going to be that maybe leads to some of those opportunities? Or
Yeah, it's going to be sellers capitulating to today's reality. The biggest issue that we find now is, of course, we can make the numbers work on any property at the right price, but no seller is willing to transact at a price that makes financial sense, at least for us as a buyer, with the risks that are in the market today. But eventually that changes, and sellers are stuck between a rock and a hard place. They have to do something. And that means that either their lender takes it over and they sell at a loss, or it means that the owner decides that it's time to actually cut their losses and sell. One of those things has to happen. The other thing that could happen is that market conditions, the underlying market conditions, improve to the place where the numbers that sellers want begin to make more sense. We're not there right now, in my opinion, but eventually these two factors they cross, right? The sellers get a little bit more motivated, the market gets a little bit more improvement, and the two intersect at some point, and then deals can be done. And this is why transaction velocity in the multifamily commercial real estate sector is down about 80% over 2021 levels. This is why, they just simply don't pencil, and that's why we've been pencils down.
Yeah, that makes a lot of sense. You need those stars to align a little bit, right, in order to get back in and make the deals make sense. Are you continuing to raise capital during this time? Are you continuing to have conversations with investors along the way, or what's that part of your business look like?
Yeah, we are, but not for real estate investments. We've been doing real estate debt investments where we've been buying the loan portion of the capital stack, which to me has just been a lot more risk averse.
Hmm.
Somebody else's money is in first loss position, not ours, which is a really feel good place to be in a declining market. And we get immediate current cash flow, which is just something you don't see, in a value add multifamily business plan, for example, where, cash on cash returns in year one are like 1 or 2%, and then they grow to maybe 4 or 5, maybe 6 or 7% over 3 to 4 years. Our real estate debt strategy is like 8% day one. We're making full distributions, literally like days after somebody makes their investment. So that's just been a better place for us for now. And then we'll eventually get back on the real estate equity side. It's just waiting for the right market conditions.
Sure. Now, are they preferred equity deals, or is it something different, or?
Preferred equity is like almost like a second mortgage in a sense. You're sitting behind the primary debt. Yeah, and we're actually buying the primary debt, which is the first position of pay. The only person in front of us is the property tax collector, and
Sure.
and that's a really good place for us to be for now.
Yeah, that's not bad at all. How are you finding those deals? And are you utilizing existing relationships, I'm sure, to find those because of your network in the multifamily space, from years back, or?
Well, yeah, you're right. It is network because this was just the only reason I'm even in this business is a bit of happenstance. So about 7 years ago, I started up a lending company and we were originating loans. And 2 years ago, or just a little over 2 years ago, we sold that company to a publicly traded entity that just, had to have it and offered us a number we couldn't refuse. So in connection with that transaction, we're now basically just buying loans from our old company. So we have really good deal flow and we know what those loans are really, really well because we designed the underwriting criteria.
Mm-hmm. That's amazing. Yeah, that's a great opportunity to kind of fall into there. Wow, interesting. So, talk to me about how before we started the podcast, we were talking about your tenure on Bigger Pockets and just being on that site for so long. How has the internet and social media, how's that changed the business? Do you think it's made it more competitive? Being kind of being the authority figure that you are and having the brand that you have, maybe in some ways you don't have to compete as much, but like I'm interested to hear from your perspective how the internet has changed things because I've been doing this for 10 years and I remember back in the day, nobody found a deal on Facebook, or LinkedIn. I mean, now it's like it's common. I don't know an investor who hasn't at least had a conversation with a fund manager that they saw on an ad on Facebook or something like that. So, what's your take on the social media side of the business and where that's gone in the last couple of years?
Well, when I started investing in real estate, email was just being invented. So that tells you how far things have come. And, so the first decade or so of, being in this business, there wasn't any social media. There wasn't, they called it Web 2.0 when you could actually contribute something onto the internet. Before it was always one way. You only could go to a website and view stuff. You really couldn't upload anything or say anything. So it changed a lot when social media came out, and I kind of could classify Bigger Pockets as a social media style
Sure.
site for real estate investors. And I think that changed a lot of things. And prior to that, meeting new investors was really difficult. What do? Do you go to the Chamber of Commerce meetings and, and network at the REIA, at the,
Yeah.
the monthly REIA meetings and stuff like that? Those were the only way that you could really meet people that were interested in this business. And, when you get on Bigger Pockets, changed everything for me. I mean, our business took off after we got exposure through Bigger Pockets, just simply by, helping people answer their questions and, giving unsolicited advice, unsolicited advice. And, I think I mentioned in our pre-show, I was on their third podcast episode number 3. They're on like episode 1,000 something now. And, so people would listen to that and go like, wow, that was a really interesting story. I want to call this guy and talk about investing with him. And it really changed things for us because now all of our search for new investors was inbound. Everybody was coming to us to invest. We didn't have to go to anyone else. And that was a real game changer. Now, it's also a game changer in a different way that isn't quite so beneficial. And that is that everybody else could do the same thing and, and raise money very easily and quickly, even though they may not be qualified to properly manage those investments or those dollars. And that created the situation where you had all kinds of really new syndication sponsors who had no experience and was jumping into deals that were much larger than they should have in the beginning of their career. And, that leads to kind of two outcomes, right? On one hand, it's difficult for everybody to make any money when you have people that don't know what they're doing, just paying whatever price required to get the deal. Well, now nobody makes any money. And then when the market collapses, then they all lose. And then that puts a big black mark on the industry where people are like, oh, those syndications, those are a ripoff, or syndications are risky. And it's true on one level that investing with the wrong sponsors at the wrong time is certainly not a very good investment strategy, but it's not an industry-wide, report card, so to speak. There's still operators out there that really know what they're doing and invest in the right properties at the right times with the right strategy, and it mitigates a lot of that risk. So the social media kind of really created some unintended consequences, I think.
Yeah, you make a really good point. For as easy as it's made it in some ways, it's made it challenging in others. And I think it's now more than ever, it's so important for accredited investors and people that are looking to invest passively, where they're going to be investing with an operating partner, to really educate themselves and be able to ask the right questions. Because you can meet sponsors now. Finding sponsors is one of the easiest things you could do if you know where to look. So it's asking those questions, and then kind of knowing what's good for the timing now, and not even so much now, but what's going to be good a few months from now, right? I mean, because a lot about real estate is kind of having some foresight to what's coming down the pipeline. How do you stay in tune with the market and what's going on, and kind of what you think is going to be happening and stuff like that? Any resources or news or places or anything like that you could share that would maybe help an accredited investor to educate themselves? Because you talked about finding solid sponsors and their experience and their track record, and asking the right questions. But then when it comes to the deal, how do they know that this is a good deal and a good time? And how do they get through the macro of it, but then the micro too? Because some things might be good in one location, but maybe not so much in another. So what's your take on that?
Yeah, it's like when people ask me about the real estate market, like what's going on in the real estate market, as if there's right? It's like, well, there's a lot of different markets in a lot of different areas and a lot of different sectors, and they're all trading in different phases from each other, and all sorts of stuff is going on out there. So, well, to begin, you asked how I keep track. So let me start there, because how I keep track is going to be a little different than how the average accredited investor is going to keep track. I keep track because we still have 1,000 units in the market. So, we can see firsthand, how's our leasing velocity? What are our street rents doing? What kind of responses are we getting from prospective residents? How are we seeing competition from new product coming into the market? That's just one way. The other way is we have a network of brokers that we stay in communication with, and we talk to them about what's going on in their markets. What are they seeing? What are other sellers telling them? What are buyers saying? Are there any buyers? Are there any sellers? Is there any transactions even happening? When they do have a deal, we underwrite the deal and we look at it to see, like, okay, what could we pay? And then we find out, how did the bidding go? How far off were we relative to what other buyers were willing to pay? And just staying in touch with things like on the ground, street level. And I think how an accredited, and in addition to that, of course, thousands of different articles, publications, and different things that I read. I spend at least 1, maybe 2 hours a day reading real estate market news about different things that are going on across the country in different sectors of real estate. So for the average accredited investor, one of the best ways to kind of at least get a foothold is to align yourself with a really good sponsor that is on the ground and does have real-time information and is following the markets very closely. Somebody that, doesn't transact just because they need to earn a fee to keep their lights on and pay their office rent. You want somebody that buys only when it makes sense to buy, not buys just because they need to earn a fee or earn money. So if you align yourself with the right sponsor, you'll get a lot of information from them about what the markets are doing. And if they launch a deal, you would like to think that it was well researched. Now, outside of that, to do your own research, follow along with different commercial real estate newsletters. There's a lot of them out there that you can get by email every day. There's the CRE Daily that comes in your inbox every day. There's globestreet.com, which has interesting commercial real estate news. Some people subscribe to the Real Deal and, read articles on that. But there's a lot of free resources out there. Globe Street is a free resource. And just, staying in touch with, different business news and articles that are floating around out there through different sources. If you can get your hands on that stuff and follow along and see what's going on, that will help you at least understand the greater macro picture.
Wow, that is some really good advice. And when you were saying that, I was thinking to myself, that's where it comes back to if you're creating relationships with really good sponsors, those sponsors should be doing all that stuff. I mean, if they're good at what they're doing, they should have a beat on all that. And I think that's important. But to your point, doing it yourself as well, and taking maybe setting some time aside during the day if this is what you want to do, and you want to add to your alternative and passive portfolio. Signing up for some of those, I like ULI and NIOP as well. There's a little fee to be in them, but just great information, and you get a physical magazine, which is nice. It got something different, but just constant emails with different news and things like that, and you do with it what you want. You soak in what makes sense for you, and kind of sometimes it plants seeds for something that comes up later down the line. You never know when you might need that information. So that's some really, really good advice there. Brian, what do you love about real estate and what you do? There's so many different hats you can wear in this business, and I like to look at it from there's capital, there's acquisitions, and there's execution. And if you're going to do everything yourself, you're going to be playing in all those spaces. You seem like you probably have a pretty good team around you. What is it that you like about real estate? What is it that gets you excited and helps you get up in the morning working in this business?
Well, nothing about real estate really gets me all that excited. I've taken the emotion out of this business a long time ago because there's really only one thing that matters to me, and that's performing for my investors. There's different types of sponsors in the syndication space. There's your vanity sponsor, who is somebody who is like, I have 10,000 units, or, it's all about, trying to talk about how many units they have or what their AUM is.
Yeah.
There's another kind of sponsor, which is like the financial freedom sponsor. I'm trying to become financially free, and I'm getting out of the rat race, and that sort of stuff. I'm going to work the 4-hour work week. And it's like, well, if I'm investing with you, do I really want you only working 4 hours? And then there's the professional investor type sponsor. And, that's the category that I want to invest with. That's the category that I aim to be, is the professional investor who is in this to produce tangible results for their investor clients. It's not about me and how many units I can get and how financially free I can become. I've achieved all those benchmarks. I have nothing to prove. It's really just about, how can I provide a good risk-adjusted return for my investors? How can I not lose their principal? Because if I do, you can't earn a return when you've lost their money. And knock on wood, in the 23 years I've been investing with investor money, I haven't lost a nickel of principal. So far, so good. So that's what gets me excited is being able to do a really good job for my clients, because this business is truly a professional investing financial services business who is here for the benefit of their investors. And nothing about real estate gets me excited. If real estate is not a good place to invest, I'm not investing, which is why I haven't bought anything in 3 years. And it's why when it is a good place to invest, I'll be doing it again.
Wow, Brian, that was gold. So what a framework to take to go back to what we were talking about with, finding solid operators and sponsors, because I think that's such a good mindset you can take to, and just a framework you can use, because pretty quickly in that person's brand or that company's brand, you're going to be able to put them in a bucket: vanity, financial freedom, or professional. So that is amazing framework to look at it. I love that. And I completely agree with you. I see people all the time talk about all three of those options, and I 100% agree, where it's like, I want to create the best company that I can create, the best experience for my investors, best experience for the people that work for us, our team, all that kind of stuff. That's more important than having $1 billion and a couple hundred units or thousands of units in assets under management. That's what's important at the end of the day, is the experience that you provide. So what are you investing for then? Is it family? Is it what's your purpose at the end of the day? What's your kind of the greater impact that you want to make, and that kind of stuff, Brian?
Well, I think it's what else am I going to do? It's like I either do this or I'm going back to work in the law enforcement industry, which I'm too old to do now. So I'm not going to do that. It's like, just I don't really have any options. This is what I've figured out I'm really good at. And if I'm doing something that I'm good at, and I'm doing something that's adding value to other people's lives, which I believe that it is, then I think I'm in the right spot. And if this was my purpose on this earth, then I'll continue to fulfill it until it can be proven otherwise.
That's amazing. Brian, how can people learn more about you and what you're doing with your business, and how can they get in touch with you?
Well, you can learn everything I know in the 350 pages in the Hands-Off Investor. So you can certainly check that out, because that was a brain dump right there. So outside of that, you could
This really is a great resource. It kind of feels like something you get in college or something. It feels like a textbook, and it's something that it's like a handbook that you can keep coming back to. I don't think you have to reading it for the right person. I mean, reading a page, cover to cover is great. But for somebody, this is a resource. No matter if you're just getting started or you're already in the business and been in it for a while, this is a great handbook to keep coming back to, and depending on what your need of the day is, that kind of thing.
Yeah, one of my investors is MBA from Princeton, and he read the text of the book before I published it, because I wanted his feedback. And his comment to me was, this should be required reading in MBA real estate programs. I'm thinking, how is it that just a high school graduate can write a book that now should be a college or university textbook in the Ivy League? Go figure. But I think hopefully I know that it's very textbook-like, but hopefully people find it readable enough where they don't get completely bored out of their mind by making their way through it. But you can check that out at biggerpockets.com/syndication book. And you can also get it on Amazon. But if you do order it from the publisher, you get like some free bonus content, like 72 questions to ask a sponsor, just on like a little sheet. And then there's like video interviews I did with some passive investors and things like that. He asked about contacting us. You can also find us through our website for Praxis Capital. It's praxcap.com, which is praxcap.com. You could find me on Instagram at Investor Brian Burke. Or, of course, you could find me on the Bigger Pockets forums, maybe just answering questions, or on one of their podcasts. They just started a new website called Passive Pockets, which is for accredited investors to learn about investing in passive real estate syndications. My book is going to be a foundation of that website.
Sure.
As is, I'm a recurrent guest on their new podcast. We've already got one episode that's come out, and I did recordings for a masterclass on passive investing. I did, I think, 2 segments of that, so you might want to check that out as well.
Wow, that is amazing. Well, Brian, thank you so much for your time today. I really enjoyed the conversation and look forward to staying in touch with you. And I hope our audience will go over, like you said, Passive Pockets. What a great place to get started and to take this conversation and the topics we talked about deeper and put some community around it. So that's awesome.
Yeah, absolutely. I think that learning from other passive investors is a great way to gain more confidence as you begin investing in passive syndications. It is a little bit of a field of landmines. You need to be careful, but you can read up on it in a lot of different ways that we've talked about here today, and learn the ins and outs before you put your dollars at risk.
Yeah, that's a really good point. I think it's important that you know yourself and you take that life assessment and kind of look at what your goals are, what you're comfortable with, what you're not comfortable with, all that kind of stuff. So you take that foundation and that framework into a community like that, because you're right. I mean, you get that shiny object syndrome and stuff like that. You know what I mean? Because there's so much to learn, and 10 years of real estate for you, 35 years and on of real estate. Do you feel like you're still learning something new every day, or what? You know what I mean? Does that end eventually? Because I feel like every day I could fit what I know on a pencil point. It's like there's just so much you can learn, and that's what excites me about this business, is that every day I learn something new, and I feel a little bit smarter, and in some ways dumber when I realize all the things I don't know.
After 780 or 790 properties that I've bought, I think I've seen it all. But the one thing about real estate is it will show you that the moment you think you've seen it all, it will take you to school and show you something you'd never seen before. So I think that will probably happen for the rest of my life.
That's funny. Well, we'll end it there, Brian. Thank you so much for your time, and I look forward to continuing the conversation with you. And I hope our audience will go over to Bigger Pockets, check your book out, see you on Passive Pockets, and let's see what we can do together.
Thanks for having me here, Peter.
Awesome. Thank you, Brian. Awesome interview there. I really enjoy the time. I appreciate you taking time out of your day to do this with me.
Yeah, for sure. No, we had a good time. That was a great conversation.
Awesome. So now we have like a little bit of a community behind this as well. I'd love to send an invite to you to maybe join us. It's usually about 10, 20 accredited investors that come in, and I'd be very curious. I love what you were saying about kind of your agnosticism towards real estate and investing. It's like you're not going to do something just because you feel like you have to, or something like that. You're willing to ebb and flow, and I'd love to take that conversation deeper, and then just it opens it up to not just me, and it's usually 10, 20 or so accredited investors, and kind of see what comes of it. You have any interest in that?
Sounds like a good time.
Cool. Well, I'll send you over info. We kind of been banking a bunch of these episodes, so this will be out in a few weeks. And once it's ready, I'll send it over to you, and we'll see what we can do together. This was really great.
All right. Sounds like a plan. Thanks for having me be a part of it.
Awesome. Thanks, Brian. Enjoy the weather there. I will. Now you going? You're probably not going to the conference if you haven't left yet, are you? Or?
No, BPCon started today or something. Yeah. I've been a speaker at all of their BP cons, but they asked me to be at this one, and I'm like, I'm not going to Mexico.
I was there in Orlando, right? Was it last year in Orlando? Yeah. And it was great. I mean, biggest freaking real estate conference I ever went to. I mean, just a great time, great people. But yeah, when I saw that in Mexico, I was like, no, I'm not going. I don't even have a passport. I would have had to gone through that torture.
I know you don't want to do that. Yeah, I have one, but I'm, it's funny because we're at that conference in Orlando. I went to dinner with 3 or 4 other guys that were also speakers, and we were all kind of talking about it. And one of the guys was like, I know 3 people who have been kidnapped for ransom in Mexico. I'm not going there. I'm like, I'm not going there. It does the feel so.
A friend who was at some big fancy resort, and like he's on the beach, and they look over, and like somebody in like a Jeep, at the top off, like the bunch of guys are like hanging out, and like they got machetes, and like they chased this guy down and beat the crap out of him. It was like just right over the wall. It was like, oh my God, like my mom would have killed me. She said anything like that, and I'm going to hear it. So it's I don't know what what the thought was there, but definitely a destination, I guess you could say, right?
Yeah, they gave it a shot. I don't think it was a big hit, so I don't think we're going to see that happen again. And I know where it's going to be next year. I can't say because I was told in confidence, but it's back in the States, thankfully, and I expect to be there.
Okay, great. Well, maybe I'll see you in person there if I don't catch you somewhere along the way between now and then.
Sounds like a plan.
Awesome. Well, have a good one. Thanks, Brian.
All right, Peter. Thanks again, man. Have a good one.
You too. Bye bye.
Ciao.